earlier, and he was talking about how so far the only company to really make money off AI is Nvidia with the chips. Do you have a sense yet of where you think the big applications will be from AI? Is it going to be in enabling self-driving? Is it going to be enabling robots? Is it transforming industries? I mean, it's still, I think, early in terms of where the big business impact is going to be. Do you have a sense yet?
I think the spending on AI probably runs ahead of, it does run ahead of the revenue right now. There's no question about that. But the rate of improvement of AI is faster than any technology I've ever seen by far. And it's, like for example, the Turing test used to be a thing. Now, your basic open source random LLM you're writing on a friggin' Raspberry Pi probably could, beat the Turing test. So there's, I think actually, like the good future of AI is one of immense prosperity, where there is an age of abundance, no shortage of goods and services. Everyone can have whatever they want, except for things we artificially define to be scarce, like some special artwork. But anything that is a manufactured good or provided service will, I think, with the advent of AI plus robotics, that the cost of goods and services will trend to zero. Like, I'm not saying it'll be actually zero, but it'll be, everyone will be able to have anything they want. Mm-hmm. That's the good future. Of course, and in my view, that's probably 80% likely. So look on the bright side. Only 20%. 20% probably of annihilation. It's nothing.
Is the 20% like? What does that look like?
I don't know, man. Frankly, I do have to go engage in some degree of deliberate suspension of disbelief with respect to AI in order to sleep well, and even then, because I think the actual issue, the most likely issue, is like, well, how do we find meaning in a world where AI can do everything we can do, but better? That is perhaps the bigger challenge. Although, at this point, I know more and more people who are retired, and they seem to enjoy that life. So, but I think that maybe there'll be some crisis of meaning, because the computer can do everything you can do, but better. So maybe that'll be a challenge. But really, you need the sort of end effectors. You need the autonomous cars, and you need the sort of humanoid robots or general purpose robots. But once you have general purpose humanoid robots and autonomous vehicles, you can build anything. And there's, I think that there's no actual limit to the size of the economy. I mean, there's obviously, the mass of Earth, like that will be one limit. But the economy is really just the average productivity per person times number of people. That's the economy. And if you've got humanoid robots that can do, where there's no real limit on the number of humanoid robots, and they can operate very intelligently, then there's no actual limit to the economy. There's no meaningful limit to the economy.
You guys just turned on Colossus, which
Yeah.
is like the largest private compute cluster, I guess, of GPUs anywhere. Is that right?
It's the most powerful supercomputer of any kind.
Hold on to your hats, investors. In a world where tech trends dominate headlines, a new titan has emerged that's causing quite the stir in financial circles. Enter Nvidia, the semiconductor giant that's rewriting the rulebook with its astonishing advancements in artificial intelligence. Since 2023, Nvidia has witnessed a jaw-dropping leap of nearly $3 trillion in market value, making competitors like Apple and Microsoft take note. But what is propelling Nvidia to these soaring heights? And is it poised to sustain this momentum? It's a tale of technology, strategy, and a healthy healthy dose of history, featuring Nvidia's prized hardware like the Hopper GPU, which is making waves in AI-accelerated data centers. As we peel back the layers of Nvidia's story, prepare for a deep dive into a world of innovation and a potential roller coaster ride of market dynamics. Welcome back, everyone, to Investocracy.
There's never a dearth of information in the tech sector for us to talk about. But I do want to start with the Microsoft piece of this, because we always talk about whether the market feels like this is 1999, poised for 2000, and here we are talking about Microsoft up for regulatory review. That sure feels like 99, 2000.
Look, if Khan was staying, that would be a different situation. I think the view of us and the view of many on the street is that Khan's days at the FTC are numbered. I think you ultimately get a more, we'll call it even-keeled, business-friendly sort of chair of the FTC in there. And we just think bark's worse than a bite when it comes to Microsoft. Microsoft went through that battle in the 90s versus, DOJ and U.S. government ultimately won it. And look, you're definitely seeing the strong get stronger in terms of big tech. And as much as this is really going to be a UFC battle that continues to really play out between big tech, but I just think when it's all said and done, the noise is going to be more than the reality, not just from Microsoft, but I think even when it comes to Google and others.
How much is going to hinge, though, on the Trump administration, the picks for DOJ, antitrust, and FTC? Because there are a number of names floated for each of those positions, and not all of them are, I would say, rah, let tech go wild. Some of them are much more focused on antitrust and I'll call it maybe potentially a similar approach to what we've seen in the last couple of years.
Yeah, I think on DOJ, you definitely get someone probably in between. I mean, look, Vance is obviously anti-tax, so you're going to definitely have someone that's a little on the aggressive side toward tech, but I think the big issue is on FTC. Because Khan, for big tech, it has been a nightmare in terms of Khan at the FTC. Her being gone, which we believe is ultimately will be the next step when it comes to January, that's bullish for tech. I think, look, a big reason when Trump came in, when you think about Khan out at the FTC, that's bullish for big tech. I think less regulations. And then who's at the table right next to Trump? It's Musk. And I think that's going to also play a big role unofficially in terms of some of these picks and where this all goes. But I continue to think in terms of this AI revolution, it is 10 p.m. at that party that goes to 4 a.m. And I don't see any of these appointments that's changing that party or that party closes early. I think we have a tech bull market that goes well into 2025, 2026. And I think a lot of this sort of noise that we see here are more opportunities to own these names rather than time to get nervous.
Do you buy Tesla here then, given the rally we've seen, the torrid rally we've seen this month?
I think get the popcorn out because I believe Tesla's a stock that could ultimately double from here over the next 18 months. It's been obviously a parabolic move, but as me and you have talked about, autonomous itself, we think is worth $1 trillion. So when you think today, I view Tesla as the most undervalued AI name in the market. It is not ridiculous. It might almost be conservative to think, could this be a $500, $600 stock? As the autonomous ultimately plays out, I think the margin story is definitely stabilized here. And I think investors, look, the haters continue to hate. They hate it at $50, they'll hate it here. But I think we sit here, and this will be sort of a golden star, in terms of when you look at the market in 2025, in terms of what we see for Tesla. I believe $2 trillion on the horizon.
In recent years, Nvidia has become synonymous with the AI revolution, thanks in large part to the Hopper GPU, a piece of tech that could impress even the most seasoned of Silicon Valley veterans. With a near monopoly on GPUs aimed at AI-driven data centers, Nvidia doesn't just ride the AI wave, it creates it. The Hopper, dubbed the brains of high-compute data centers, holds a commanding presence with its robust computing speed and energy efficiency. Competitors like Advanced Micro Devices, AMD, are left in the dust, as Nvidia commands sky-high prices for its mighty chips, up to $40,000 a piece, dwarfing AMD's offering. But beneath this glittering facade of success lies a timeless lesson from history. Think about it. From genome decoding to the metaverse, every paradigm-shifting innovation has experienced the dreaded bubble burst. These trends must navigate the turbulent waters of overambitious investor expectations before they reach maturity. Take the infamous dot-com bubble as a quintessential example. Businesses, once seemingly invincible, saw their valuations plummet dramatically. Yet amidst the fallout, a vital truth emerged. It's the long game that counts.
I was speaking with the founder of a tech company that is absolutely foundational to the generative AI era, if you will, and thus an early indicator of what's happening in the market. And this person said to me that they think that we're much closer to being oversaturated and oversupplied in NVIDIA chips than anybody realizes. Your thoughts?
Well, it doesn't seem that way right now. I mean, some of their older generation parts, like the Hopper parts, supply's gotten a lot better as we've gone through the year. The Blackwell parts that they're getting ready to launch now seem absolutely constrained. Right now, there is a lot of capacity that is coming online as we go through the year. And this is why people get positive about NVIDIA, because if the demand is there to meet that supply as it comes online, it still suggests a good amount of upside relative to where I think expectations and numbers are. So that will be the debate, again, as we go through 2025, as that supply comes online, is the demand there to meet it or not? I would say as we stand right now, the demand still looks off the charts. At least at this point, all these guys are going to be selling everything that they can make.
So while NVIDIA's past 2 years seem almost euphoric, experts caution against potential near-term volatility. Market leaders during these bubble events historically shed significant value, as much as 80%. Even the stalwart Meta platforms had its fair share of trials in monetizing the metaverse, resulting in a steep nosedive before bouncing back stronger. NVIDIA, with its diversified product lines from PC gaming to virtualization software, potentially stands on firmer ground. It's a reassuring thought for investors that NVIDIA might avoid the harsher crashes, but still, vigilance is key, as history sometimes has a knack for repeating itself. As AI garners more attention, it becomes essential to question how businesses plan to monetize this nascent tech. With many companies yet unsure how to harness AI's full potential, the current upsurge in investments may be more about fear of missing out rather than solid strategies. Herein lies the dilemma. Are investors betting on an accessible future, or are they prematurely celebrating AI's potential? But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
I mean, I think as me and you have talked and we've talked in the show, this is just the beginning. I mean, I think this is ultimately going to be another 2-3 year bull market for tech, because it's a fourth industrial revolution that's playing out in front of us, and that's going to be big tech and the multiplier. And I think it's only 10 p.m. in the AI party that goes to 4 a.m.
Yeah. Have you gotten any later in the party, or are we still, it's always kind of early, isn't it? I mean, it's been a year now, but we're still at 10 p.m. Oh, we started at 9. Okay.
Started at 9, now we're 10 p.m. And look, we think tech stocks are up another 25% over the next year. And I think NASDAQ 25,000 a year from now is something that we're going to start talking about going into the end of next year, early 26.
Yeah, so much of this, there it is, the last line there, so much of this depending on, the numbers are staggering. We talk about them all the time, quarter to quarter. But you think AI CapEx is going to exceed $1 trillion. Why? In 2025, I should say. Yeah, right. Why? Yeah.
It's everything we're seeing. Look, that's why we travel the globe, right? It's trying to understand where the AI CapEx is and what's happening in the market. I think Street's underestimating AI CapEx potential by 30 to 40%. And I think the biggest thing here is the multiplier. For every dollar spent on an NVIDIA chip, there's an 8 to 10 multiplier across the rest of tech. That's why you have names like the Messi of AI, Palantir. You have other use cases that are now starting to be in software, Salesforce, front and center. And this is just the beginning. It's get the popcorn out, because the rest of tech now sees the benefit.
The forecast for NVIDIA, and AI in general, remains enticing in the grand scheme of things. The semiconductor giant has undoubtedly positioned itself as a vanguard in AI technology, with strategic hardware and software solutions like the CUDA platform, which continues to ensnare enterprise clients into its ecosystem. But as investors consider NVIDIA's current stock meteoric rise, it's crucial to balance excitement with pragmatism. NVIDIA's position today is robust, but with great gains come great risks. Embracing the lessons of similar tech upheavals, NVIDIA's investors might face a turbulent path ahead. Yet, those who dodge panic and capitalize on long-term strategies could find NVIDIA a rewarding prospect. So, dear viewers, what's your take? Do you see NVIDIA as a fleeting celestial spark, or is it the dawn of a new tech era, destined to illuminate the skies of stock markets for years to come? Share your thoughts and let's decode this stock phenomenon together. And finally, if you would like to know what companies like NVIDIA have been up to these past few days, go ahead and click on the next video on your screen. See you there.